stock. So after checking all the financials and fundamentals as I explained in my previous videos, if they are all impressive and I decided to invest, then I follow below quick checks. First check below 1, then it is very best time to invest in that case also stock PE will be higher. Example, I will take the and when we see some of the peers stock PE, Kodi is standing higher after the PB fintech in the list. So this is an example showing on all these points. Movements are happening within the company. Example, if company is going to show you on selecting a company to in future this stock price will be fall down. So it all depends on the market. Hello everyone, welcome to other video in We Invest. This will be the last before video of our introduction series. Today's video is very important to the fresher or even experienced investor in Indian stock market. Most of us will always have a constant question in mind whether this is right time to enter any stock or to exit from a stock. During my initial investing career, I used to always have this question in my mind. So I am here to explain today my view on this point. Remember again, I am not a SEBI registered advisor and listening to people like me can be harmful in your investment journey. Treat my video as only for educational purpose and think before taking any decision to be implemented. So let us start our today's video. Honestly saying, there is no clear defined process explaining when to enter and exit a stock. But the procedure I follow, I will explain to you. So let's start with when to enter a stock. So after checking all the financials and fundamentals as I explained in my previous videos, if they are all impressive and I decided to invest, then I follow below quick checks. First check, the stock PE is less than industry PE or not. Second one, the stock PE is less than or equal to its own average PE or not. The third point, stock PE is less when compared to its peers. Fourth point, stock price is near to 52-week low price. Fifth point, PEG ratio is below 1 or not. If stock PE is less than industry PE and its own average PE, and if the stock is at 52-week low price or closer by it, and profits from financial statement is impressive along with PEG ratio below 1, then it is very best time to invest in any stock. This kind of stocks will definitely become multi-baggers for future. But remember, for always growing sector companies, PE will always remain higher for the stock. Also, if market expects particular company X will perform well in future, in that case also stock PE will be higher. Example, I will take the company Kodi Technolabs. If we see this company, I can see the stock PE is at 147, whereas the industry PE is 37.32. So it is almost 4 times higher when compared to industry PE. And when we see some of the peers stock PE, Kodi is standing higher after the PB fintech in the list. So this is an example showing the growing company having the high stock PE when compared to industry PE. And also, if stock is already doing well from the past, then stock will always be at the 52-week high price or close by. Also, if a stock is continuously getting larger orders and more number of work orders, then also stock price will be closer to 52-week high price. So these all can be an exceptional points. These all highs doesn't mean we should not enter them. So we should compromise sometimes based out of our analysis on all these points. Now let us see some points when to exit from a stock. So when you notice some negative developments are happening within the company, example, if company is going to bankruptcy or company officials are linked to the confirmed illegal cases and sudden fall in sales, profits and earnings per share in the quarter results or annual results minimum 30% to 40% when compared to previous year performance, or if companies debts are increasing, or if you feel management is not effective and if you got expected profits and feel to exit, then this would be the right time to exit from a stock. I will take two examples to show you on selecting a company to enter a stock and to exit a stock. So let us take Kodi Technolab Limited as an example. If I can do a fresh entry into this company, I can see market cap is 2100, which is a small cap, and other financial details, and the stock PE is 147 and industry PE is 37.32. But first I should understand why the stock PE is on higher side. If I see the details of this company, it is in software development services to a diverse set of industries. If I go to the website of this company, I can see it is into AI development, machine learning development, mobile app development, web app development, quality assurance, emerging technologies, and IT consulting services. So this is into the emerging technologies of future. So that's the reason markets are expecting a higher stock PE from this company. If company can deliver financial performances in upcoming quarters of greater results, then definitely this stock price will be maintained. Otherwise, in future, this stock price will be fall down. So it all depends on the market expectations versus the company performance. So to enter in this stock, I can see stock PE is higher than industry PE, and when I see the average PE of the company, it is at 78 and it is almost double the average PE also, so it's on higher side of the average PE of the stock. When I compare to peers also, this company is on higher side, but if I see the financial results, the sales are increasing, the net profits are increasing, and earnings per share as well, and there is no peg ratio for this company shown here. And 52-week high price of the stock is 41.75 and 52-week low is 215 rupees. If I see October 18th, before 6 days of recording this video, the PE of the stock is around 400 levels, and today it is just 147. So for me, this looks like a company where I can do a fresh entry because I am ready to pay for 147 PE and enter into this stock because it is into emerging technologies, and definitely I think the stock market can expect 147 of PE for this company. And recently I exited from one of the company from my portfolio, that is Advik Capital. The reason why I exited from this company is because of the sudden fall of more than 30% in its recently submitted quarterly results. If I go into this company financials, I can show that sales have fallen down about 30% from 157 crores to 102 crores in this September quarter, and the net profit also fallen down about 100% from 6 crore to minus 0 crores, and even earnings per share fallen down from 0.10 to 0 rupees. So this is a concern situation for me to continue into Advik Capital for future. So as I told, one of the point mentioned for exiting a stock which I follow is if the sales or net profits and earnings per share fall greater than 30% or equal to 30%, I will quit from this company. So that is about entering and exiting a stock. Before closing, I would like to speak about volatility happening in the markets from last 1 week to 10 days. This volatility is due to the foreign investors exiting from Indian stock markets. They sold more than 80,000 crores in this month. This is a huge amount even when compared during the COVID period of time. The other reason is also increase in crude oil prices due to the war situation. But remember, these will be the temporary impacting reasons to the market and not permanently in the long run. So if you are confident on selecting good companies for long-term investment, then stick to it in spite of you facing to these market deviations in between. Feel motivated for the long run Be disciplined and patient. Definitely, you will see the results. I also want to highlight that if you do not have time to do all the analysis and still interested to invest in stock markets, I have a private workshop group. If you want to stay connected with me in your investment journey, then please reach out to this email ID. I wish you a good luck. In our next video, let us put some light on different options available in Screener tool. And thank you for watching, and please do subscribe to not miss my content.